to another DeFi Raiders AMA. My name is Relentless. I'll be the host today. I have the pleasure of talking to Levy, the founder of IntentX, which is a new perp trading DEX perp trading platform that's launching on Base soon. So with that, Levy, if you want to go ahead and kind of give an introduction and your background and what kind of led you to deciding to found IntentX.
Sure. So for those that don't know, IntentX, first of all, we're a perpetuals DEX. We don't offer spot trading, and really the platform is functioning using SIM.io backend, which has been in development for a while, and we'll kind of jump into that. And we're looking to bring a lot of really new things to the market. So first of all, using this new type of trade, we're able to offer deep liquidity, wide variety of pairs, and at kind of like a low cost basis. And then we're looking to really leverage that with, cross-chain functionality, account abstraction, other UX focused features, and overall just push sort of this technology platform to the forefront of DeFi and really compete with the bigger players in the space, because our offering is hyper competitive even at this early stage, and it'll just continue to get better and better as we onboard more and more solvers. So that's kind of what's in the works. And then my personal background, I've been in crypto for a while now, since kind of the 2016, 2017 cycle. I've seen a lot of things come and go. And specifically, I've been, all in on kind of the DeFi sector since early 2021. And, I do trading, I do investing, I do different things in the space. Also, I'm a builder. And one of the things that was interesting to me was the, DeFi perpetuals. And I really have worked on different projects in the space. I've done a lot of research, and I saw that none of them were really solving the liquidity challenges that exist. And kind of the only one was SIM. And so the origin of IntentX has been really organic, I would say. Like, I've been kind of following the developments that they've been building, and kind of the backend potential is really infinite scaling. And I genuinely believe that this is the system that, overtakes Binance in terms of volume and scale. And so, yeah, I've now put together a team. We've constructed IntentX, and we're looking to kind of be the spear tip that brings this product to market with, superior UX, marketing, kind of educational content, all of those good things. So that's a little bit about, my background and IntentX as well.
Yeah, fantastic. And then how many people you got on the team?
So the team right now, our core team is 12 members right now. And we have some external members as well, like with the design team. But yeah, we're really, operating now at like a pretty sizable scale, and we're looking to expand that into 2024. We're, well-resourced team, well-funded team, and we're really going to take things up a notch in 2024.
Yeah, very cool. Yeah, very cool. All right. So appreciate the intro and all the background and stuff. So before we kind of get into the specifics of what you built with IntentX, I'm kind of interested to see what it is that you thought were the major problems with, the current perps, DEXs, trading platforms that you wanted to solve, and then how you guys are looking to solve some of those things. Well, I guess we can get into how you're solving with the project specifics, but yeah, just kind of what the issues were that you decided you needed to try to fix.
Yeah, this is interesting. So I just came off a panel with a few larger players like Synthetics, Quenta, Polynomial, Mux, Gains, and RabbitX. And the entire talk was about UX and improving UX. And while I agree that's a really big focus, but even of ours, but the bigger problem is liquidity. And anyone who's traded in any significant size or quantity just knows that on-chain trading right now isn't competitive with centralized exchanges. So the bigger issue at play here is if I'm a trader, I have to pay huge sums of fees, pay huge slippage, pay huge funding rates, just to get into positions on chain. And even within those positions, I can't even access all the pairs that I want to trade. So that's really like the number one foundational issue that we're looking to tackle. And I think we've really taken the right approach architecturally to bring this together. Rather than starting like an AMM project, which I believe has inherent limitations, we've kind of worked with Sim here, and the foundation we have is really strong. And even in this early stage beta product, we have like 189 pairs. We have Binance liquidity depth levels, and we have a fairly low cost to trade. And that will just continue to improve over time. And we're kind of onboarding the next solver, which is a key entity, which will help bring down the spreads significantly. But this is a great foundation for us to build on. And that's really, what we're trying to solve. And all of the UX stuff that we are working on is kind of periphery. But the number one thing in my mind is just good trade experience. And so, we have pairs that like nobody else has on chain right now. We have 189 pairs. There's no other DEX with this offering. And then outside of, BTC and ETH, we're already the most competitive on spreads in any size, I suppose. So we're already there, right? And this is just like very early stage. So yeah, really excited to continue building out.
Yeah, fantastic. Hey, since you already missed it, I know I sent you the kind of script here, but since you already mentioned it, we might as well kind of dive into it. I want to talk about how you guys have managed to kind of increase the available liquidity, especially through the account abstraction, which I think is, we talked about. You've seen account abstraction being used to like onboard new users, right? You need account abstraction so people could sign in with their Google and yada, yada, yada. But this is the first that I've seen where it's been used to be able to bring liquidity across all these non-native chains. So I was wondering if you kind of just want to talk about how you guys are able to do this really.
Okay. Yeah. So the account abstraction solution, I think what you're asking is like the cross-chain functionality.
Yeah.
And yeah, so this is something that's in the works right now that we're at a really advanced state actually. But we actually have other constraints right now that we're focused on before doing this mass on-ramping through account abstraction. But the solution essentially is it's a managed account with subsidized gas. So there's kind of like no gas, or gas is abstracted away and managed for the user. And then we are enabling cross-chain deposits. So we looked at the cross-chain architecture kind of top to bottom and what solutions are available. And right now, like the cross-chain tech is just not quite there for a good trade experience. Using like a layer 0 or Axelar cross-chain messaging, there's a delay of like 20 to 30 seconds on transactions. And while you can, get that down a bit into the future, that's just simply too long to have a good trade experience. So our solution was more to abstract away the kind of chain functionality and then enable cross-chain deposits. So if you're a user on Solana, you would be able to essentially set up an account, deposit directly from Solana, and withdraw directly to Solana. And you could do your trading. And even though in the back end that trading will take place, let's say on Base, you won't really know about it, and it doesn't really matter to you because you can withdraw it and deposit from whatever your preferred chain is. So that's kind of how we've approached it. And then the other thing is on the cross-chain functionality, we are going to be deploying like natively on these different chains. And it's kind of to solve that problem that I explained, which is that cross-chain communication systems are just not there yet in terms of UX and tech. So to offer the most consistent, the most reliable, the quickest kind of trade experience, we will be deployed on all these different L2s and then potentially other L1s into the future.
Yeah, that's very cool. As I was reading through it, I was just thinking like this is such a huge way, obviously such a huge way to onboard new users, but then to also bring the users who want that kind of seamless trading experience on whatever chain that they want to use. And it kind of eliminates a little bit of the need to be like a chain maxi in a way for the trading. And so I thought it was super cool. So.
Yeah, I wanna highlight something here that's interesting. So, the other existing models for perps trading are AMM and order book. And within that, there's a bunch of little nuances, like people are tweaking little parameters. One AMM is slightly different than another AMM, or maybe there's like a hybrid system, like we see kind of like a hybrid order book AMM. But all of these are inherently limited in their cross-chain functionality because AMMs at the end of the day have a liquidity pool that has to be kind of like centralized on one chain. And you can't, you could fork your code, but you can't fork that liquidity. So they're kind of more like anchored to a specific ecosystem or chain. And order books have, technical challenges. You can't really you can't really run a cross-chain order book with settlement. You just don't have the technical capability, I suppose. So all the order books are kind of running either their own L1 or they have like an off-chain order book solution and an on-chain settlement, but they are kind of technically limited. So there's actually no other solution that will operate like ours, where doesn't matter, you could choose whatever chain you like, whatever one you prefer, and you could just trade natively with the full product offering. So that's going to be really cool to see in the next year.
Yeah, that is actually really cool, and I'm excited to see. I have never been like a huge trader, just because I didn't have a lot of time to learn it over time. But I have been doing more trading on IntentX so far than I've done on any other platform, and so far it's a crazy good experience. By the way, just from the comparisons of what I have done, and so once we're able to do this from like other chains and stuff like that, I'm excited to kind of see that play out and see the differences there and how much more seamless it's going to be as I get into trading. And hopefully I'll continue to make money. Yours is also the only platform I've ever actually really made money on, so that's super cool.
Yeah, I mean, we don't counter trade you, so we want our traders to make money.
Yeah, I appreciate that. I don't know if it's
we did an analysis this last month to look at trader data, and our traders like overwhelmingly won. Like the net P&L was almost $1 million. So really happy to see that.
Yeah, absolutely. All right. Okay, so let's kind of get into the architecture here of what you guys have built. And then first, we'll start with, we already talked kind of about liquidity and all that stuff. So let's talk about the intent-based architecture. What is the difference between intent-based and the typical trading, and then the difference between your quotation system? You guys got the automatic market for quotations as compared to, the general, people have to, I don't know how to say it, but it's not generally automatic, right? It's usually the standard RFQ system. So yeah, if you want to kind of dive into those things.
Yeah, so we're certainly building on top of some really great innovation that SIM has pioneered, and so that's kind of where this intent-based system comes from. It's been in development for quite a long time now. It's actually, even before intents was a word, this has been in development. So it's kind of finally coming into its own in terms of a usable product. And how that changes the trade flow is like on our platform, you trade directly with a market maker. So it's peer-to-peer trading. You're not trading against a pool, and you're not trading against an order book. It's just one-to-one. And essentially, instead of, when you push long, and you're not actually executing the order in that moment. Instead, you're sending an intent to that market maker, to the counterparty, and you're essentially telling them, hey, I intend to make this trade at these parameters. And then that market maker can look at that intent. They can hedge themselves, and by doing this, they can source liquidity essentially from a centralized exchange, and then they can fill your order kind of afterwards. And this way, it allows them to proactively hedge their exposure. And actually, it's a really good arrangement for market makers. And then because they stream quotations, so in an order book, market makers make maker orders, right? And when you do maker orders, you actually have to commit capital at that price point for that pair in whatever quantity you're offering. And it's actually quite, technically complex, but also requires quite a bit of capital and risk to market make a wide range of assets with deep liquidity. And that's kind of what order books struggle with right now. But in our system, the market maker just sends quotes instead of actually maker orders with no capital commitment. So these quotes are like soft commits, right? That's the market maker telling you, I can offer you this price for this pair. And then the user sends their intent essentially once they're happy with the quotation that they've received. And the market maker has the ability to kind of proactively hedge and then fill their order. And so that expression of trade just fundamentally allows for a lot of things. And a big one is, on the market maker side, it allows them to actually quote for a huge number of assets without a lot of capital. So on an order book for a market maker to make, 189 different pairs is a huge capital requirement. It carries huge risk, and it's just technically difficult to do. But the market maker at IntentX is doing that with actually pretty low capital. Right now they're operating with about $1.5 million in capital. We're offering $10 million of open interest across 189 different pairs. So that's kind of what you get out of this rearrangement of trade. And then long term, once there's more market makers onboarded, they start to compete with each other on offerings, on fill times, on funding rates, and a whole bunch of different parameters. And that's what kind of allows the system to scale really optimally.
Yeah, it's okay. Yeah, very interesting. And then how does the I'm just trying to kind of figure out how the automatic streaming kind of works here with the continuously streaming quotations. Is that based off what the two people are putting in, right, for their intents? Does that make sense?
So it's so RFQ systems, they have existed for a long time in finance, right? That's nothing new. And an RFQ is essentially a trader going to a desk or to a counterparty and saying, hey, I want a position on Bitcoin. What can you offer? And then different market makers can send them, quotations, and then the trader can review, level all the different quotations they receive, and pick the one that they want to execute with. That process, it still works, and it's still actually used quite a bit, but it's a little bit slow, right? And usually it's more institutional and large size because, it's not great UX, I guess. And where, Paradigm is a big institutional platform that does RFQ trading for crypto assets. They essentially have fill times within 5 minutes, right? Because this whole process to play out takes a while. Now with automating the quotations, what that means is the market maker is actually streaming the quotes at all times in real time. And this just eliminates friction and eliminates an extra step from the traditional RFQ system, where now the trader who arrives at the platform, they don't have to request a quote. They already know what is being offered, right? And once we have multiple solvers in the system, they'll have multiple quotations, right? And they'll be able to see upfront, okay, am I happy with this quote? Am I happy with the price that's being quoted? If so, I can actually just send an intent to trade. And when you submit that intent, it's not a request, right? It's not a request for quote. The quote's already been settled. It's automated. What you're actually pushing is an intent with your collateral, and that allows the market maker to just accept and fill that intent kind of right away in one step. So what it is it's taking a multiple step process and it's trimming it down and streamlining it. And with that, you get fills on IntentX within seconds, right? Not within minutes. So it's really bringing the UX up to, a competitive standard with different AMM products and even order books.
Yeah, fantastic. Okay, sorry, I just had to kind of clarify because I was trying to, read the charts and all the diagrams that you have on here to try to make it fully make sense without having a deep background with Perp DEX platforms, right? It could be somewhat, I guess, confusing to an extent, but now it makes sense. All right, very cool, very cool. So I guess what would be, right, we know all the pros here right now. What would you assume are the cons, or what would you say are the cons of this type of system versus traditional perp dexes that people are used to?
Yeah, so the biggest con right now, to be honest, is that this is an entirely new system of trade, and there's, it's challenging to build something new, right? Especially when you don't have any like references. Like if I were to build an order book today, I have so much like other existing kind of order book exchanges that I can go off of and kind of like model around and, model my liquidation engine around it, model like different UX elements. But that doesn't exist in this kind of like new AMFQ kind of sector. So that's kind of the biggest thing, is it's a bit of trial and error. It's a bit of, listening to user feedback and building systems that solve these UX issues that are unique to the system of trade. And, one of them, for example, is that the intents to trade aren't always filled. Like there's no guarantee that your order goes through. We try to coordinate the quotes as best as we can so that if you do push a trade, it's accepted from the market maker side. But as always, like there's no guarantee. So our objective is like to bring down the frequency of trades that don't go through. From right now, it's probably like, 99% of trades go through, 1% doesn't, to like, we want 99.9% of trades to go through. And that is a lot on like communication. It's, if a trade doesn't go through, we need to advise the user why it didn't go through, what parameters they need to adjust. So this is like one big challenge that we have, and we're working really, really hard to improve this. And then a second challenge is just scaling and kind of just development time really on the actual system. Doing like stop loss and take profit is a bit harder in the system than it is on an order book, because an order book, you could just set up an order type like that triggers, for a stop loss, and then it just sold off into the order book. Well, we don't necessarily have that with the peer-to-peer setup. So, that's something that is being worked on right now. And then there's obviously a lot of improvement on actually filling the orders. So one of the things that's also in the works from Sim.io, who's like the backend provider, is gasless, kind of like off-chain signatures for transactions. And that will not only improve like the execution times and fill times, but it'll also be gasless. And like, that's kind of like a point of friction that exists still in the system. So I would say like the biggest challenge is that we're early. And one more is on the market maker integration. Like, although this is, early great operation for them in the sense that they can manage their risk really well, they can be profitable on all their trades. It's very capital efficient. Those are all great things, but it is a new operation. And again, there's some friction with onboarding market makers because it's something they're not used to, so they have to see that the system is in operation, that it works. Then they have to like spend development resources to kind of like build out their own solution and operation. So these are the types of challenges that we face, but long-term it's worth it because the foundation is so strong that once we kind of like gain momentum and we have these first few integrations for market makers and we have kind of like this core functionality and user experience ironed out, we can scale infinitely. And so we sacrifice a little bit of that like early, early friction. We introduce some early friction, but for long-term gains. So that's what we're kind of working on now.
Okay, yeah, absolutely, very cool. And then something that kind of just popped into my head. So for the stop loss, take profit, if you guys were to have tried to implement that initially, would that be parameters that both the market maker and the trader would have to agree to, like in the initial kind of request?
Yeah, there's different ways of doing it. So one way of doing it is directly through the market maker. And so you actually tell the market maker when you make the order, like, hey, this is what I want my stop loss to be. And then the market maker can set that up for you. Like if they're hedging to Binance, let's say, they'll just set that up when they're performing their hedging operation. This way is the most, I would say, efficient process because you get the exact price you want. The market maker knows in advance that this is happening, so they could just give you like a really tight quotation. They don't have to worry about like, a random market order coming through to close. So that's kind of the optimal solution from an execution standpoint. But then it introduces some trust, equations into it, where now the market maker kind of knows your stop loss, and some traders, wouldn't like that, right? And that's where there's a second solution that's available from the front end side, which is what we're working on now, which is like stop limit orders essentially. And how it would work is you would queue up an order with us, and we would hold that order until price hits a certain point, and then we would actually send that order to the market maker for you. And what that would be is like the market maker doesn't actually know where your stop loss is, but once it hits that level, we as like a third-party entity kind of push that transaction through, and they can close it. So this is something that we're working on now, and it'll be hopefully available pretty soon. And then also kind of on the back end with the market maker, the other stop loss option is also being worked on. So we kind of want to, and again, this is something new, so we kind of have to like, develop it, put it out in the market, and see how it operates. And then the idea is we give traders the optionality. If they want to protect their information, they can do it. If they want to disclose their kind of like stop loss take profits and they trust their counterparty, then they can potentially just get better fill experience, like essentially better fill prices for their orders.
Very cool. Okay, very cool. All right. Okay, so I guess we can kind of, move on just a little bit. I guess the next thing we're going to talk about is kind of your mechanisms for how you guys are maximizing your capital efficiency, right? When you look at your charts, you got 100x the efficiency, and you mentioned that that's kind of through the just-in-time liquidity, features of typical RFQ trading. But what are the other mechanisms that you guys are putting in place to achieve this kind of capital efficiency compared to other Perp DEXs?
Yeah, so that comparison model was specifically versus AMM type models, and those are just inherently really inefficient because, like that liquidity pool ends up counter trading all the positions, and there's no way to like scale that in a really efficient way. Like one, the pool has to be inherently over collateralized, so you can't facilitate more trade than you have in liquidity because you need to always be able to pay out a max loss scenario. And then the second thing is you have to protect the LPers. So even if you have, capital available, you can't offer it all because, you can't wipe out your LPs. No one's going to LP with you. In let's say like some weird market volatility scenario where the traders win. So there's another cap that has to be imposed, which is more risk-based. And so these AMMs, they can't offer like long tail assets really efficiently. And if they do, they have to actually cap that to a very small part of the actual LP, because the idea is, well, okay, if traders really win big on this long tail alt, which are really volatile, so that can happen, we have to make sure that the LPs don't like lose everything. And that just makes it really capital inefficient. And it kind of creates like these hard economic limits on how much trade you can facilitate. Whereas on the inverse, in our system, the market maker actually operates with leverage. So they're under collateralized, right? Instead of having more capital than needed to facilitate the trade, they have less capital. And essentially it works the same way traders do, where you can take leverage and you only partially collateralize that position. And in fact, you only collateralize the profit and loss of that position. So if you have like $1,000 with 10x leverage, you get a $10,000 position with $1,000 of capital. And the market makers are operating the exact same way in the back end. So you can achieve, 10x capital efficiency from the market maker side, versus, let's say, an AMM where you might achieve like 1/10 the capital efficiency. You might need $10,000 in LP to facilitate $1,000 in trade. And that's what gets you your, 100x difference.
Okay, very cool. Very cool. That makes sense. Awesome. All right. Well, let's kind of move into some more kind of specifics of what you guys are offering. I guess we could really want to talk here about, I like your, we were texting a little bit about it. I really like your tokenomics model and what you guys are doing to preserve kind of capital long term for the protocol and for users. So let's kind of talk tokenomics. If you want to talk, Intex and then also XIntex, and then all the different utilities that you guys are offering for XIntex.
Yeah, certainly. So from a high level, our kind of vision for the token is, we kind of wanted to structure it around the staked form, which is the X INTX. Like that's essentially you take INTX, you stake it, it's now X INTX. So we've like patterned as much utility as we could into that staked contract as possible. So the first and biggest thing is that 100% of the revenue for the protocol is distributed to the token stakers. And this is actually something that you don't see in the space, partly because, a lot of these order books and other type of projects, they actually retain a big portion of the revenue to the team, and they might distribute, 50% of it. And then the AMMs, they have to actually pay off the LPs quite heavily. So GMX, they pay out, 70% of the revenue goes to the LP, only 30% goes to the token stakers. In our system, 100% goes to the token stakers. So that already is kind of huge value that we're baking in. Then we're adding kind of different mechanisms to that. So one is, we have the trade to earn program, and users who are staked into the staking contract will actually get additional trader incentives. So the idea is we want to build a model that, traders and whoever is farming and getting these tokens, that they want to keep them. They don't want to sell them. And that kind of brings us to our mechanisms. So we kind of have this really great value, really great utility, and then we leverage that with a few different mechanisms. One of them is a multiplier point system, which the longer you stake, the more your share of revenue gets or grows. But it is capped at 16 weeks. And this kind of comes from GMX multiplier points, which people like. But what happened with that system is, the really early whales who got in, they kind of accumulated more and more multiplier points. And now for a new entrant to actually stake, your revenue is really low. So you're disincentivizing like new participants with that now. And that was an improvement that we've made. So we've capped it at 16 weeks. And essentially, anyone who's staking can come in at any time, stake for that 16-week period, and have the maximum rewards distribution. So that's a really key part of it. And then another one is our dynamic backing ratio system, which is essentially an exit fee that's applied when users exit XINTX into liquid INTX. And if you exit on the same block that you stake it, essentially, you have a 25% penalty, and that decreases to 0.5% at the max maturity. The max maturity is 16 weeks. And whatever that, so that entire exit fee is kind of given to the rest of the stakers. And it's designed such that if you're a staker and a long-term one, your share of the protocol just grows and grows and grows and grows. And with that, your share of revenue grows. So that's a really great mechanism to reward long-term stakers. And then that also protects, everyone who is staking from, additional incentives or emissions, the trade to earn program, for example. So traders, and that kind of brings us to the distribution and release, which is pretty much every INTX that comes to market comes in that staked form. So all of the trade to earn incentives will be awarded in staked like XINTX. So like what we've seen in other protocols is there's people just kind of wash trading and like selling the tokens, right? And the tokens end up down only. It's essentially like a bad emissions model. But in our system, if traders are doing that, then the rest of the stakers are still protected because a big portion of that just goes to increasing their share of the protocol. But at the same time, we're still incentivizing use and adoption. So I'm really excited to kind of see that in the fold. Kind of the more time goes on, the more, I always like to poke holes in whatever I'm doing. And I really think the system is going to be awesome. So looking forward to it.
Yeah, it's pretty unique, and and I was kind of, I know you saw the questions and kind of the script, but I was wondering, like, are you guys ever going to lower that 25% early unstaking fee, or is it ever going to transition to like, hey, you'll lose rewards plus a portion of the IntentX, or is it just always going to be that, hey, you're taking a haircut on the IntentX itself?
Well, that's it can be changed into the future, and perhaps it is, but it would definitely have to be like data driven. And I know that you mentioned, or you had a question there about governance, like that might be a governance function, right? It's changing kind of some of these parameters. But I guess that, another way, like you asked, like, what if some of that amount that was forfeited gets burned instead of distributed? I actually really don't like the burn mechanism because it's kind of value dissipation in a way. And I would rather give it to our stakers, right? Like, I don't know. I think the burn mechanism is kind of overplayed. And a big contributor to that is, there's sometimes founders and teams are worried about regulatory stuff. And it's like, if you distribute revenues to token holders, well, now it's a security, right? And so instead they like buy back and burn. But what that is just value dissipation. And then the people actually realizing that value that's created with that buyback is people who are selling. So you're incentivizing sellers, not like stakers. And, I get it. It's kind of a meme, like people like burns, people like taxes. But fundamentally, it's just better to give it to the remaining stakers. So that's what I think will have the long-term appeal. And so I'm kind of playing that long game.
No, I completely agree. The whole reason I had that question in there was I really just wanted to see like the mindset, right? Because every different builder has a totally different approach to whether they want to burn. And I mean, yours isn't an inflationary model necessarily, right? You're capped at the tokens anyways. So like you said, value dissipation. And it makes sense if you have like those, I mean, you remember all the rebase tokens, right? Like, oh, well, we burned 1 million. Well, it doesn't really make a difference when there's 400 billion in the market. So, yeah, so I just kind of wanted to see what your thought process is there, but kind of behind how you designed it. I like what you're doing here. And everything that you've done with your token model, including from the LGE to I guess I'll ask about the airdrop in a second, but really does incentivize long-term growth, and you're starting to see it. I mean, I saw it in my interview yesterday. Is a lot of all the stuff that they're giving out is also locked, right, to incentivize. They got a little bit different decay model kind of thing, and when it unlocks. But yeah, it's cool to see the transition from the typical like, oh, we'll buy back and burn, and to kind of see that evolution of the approach there with, hey, we don't believe in that. We want to keep the value to our stakers. So
yeah, look, we're 100% aligned. So like we're a very DeFi native team, and 100% of the revenues are going to token stakers, which is in and of itself a great alignment. So like the team will be staked, the treasury will be staked, like everybody's staked. So we're really like working to make this the best possible mechanism possible. And to kind of piggyback off that, we did a raise that we announced last month, and there was no equity component to that raise, right? It was entirely in tokens. And this is kind of, maybe the dark side of crypto that some people don't know about. But when you have kind of equity raises split with like token models, now you have the split interests where there's actually an equity component to the project that is at odds with the token holders, because the equity, like what benefits the equity holders doesn't necessarily benefit the token holders, right? And that's where you saw like Uniswap X, for example, or Uniswap with their, they introduced fees that kind of go to the project and the equity holders, but not the token holders. And there's just like this split alignment that we don't have essentially. We've done everything through the token, like all of our kind of like seed deal is through the token, all of our team is aligned through the token. So yeah, like we're really building this as a long-term mechanism for value creation.
Yeah, yeah, very cool. And then another thing with the tokens, your initial airdrop that you're going to do, is that also going to be vested?
Yeah, yeah, it's
Okay.
it's all in stake form. And just to clarify,
Stake.
it's
Yeah,
not.
sorry.
Yeah, it's not necessarily vested. Like you can unstake whenever you want, right? Because this is a little bit confusing to some people. It's like there's a 16-week maturity, so they're like, oh, it's locked up. No, it's not locked. Anytime you want to exit, you can. It's just depending when you exit, you'll have a variable fee. So that's what it is.
Yeah. Okay. Very cool. All right. And then another, let's kind of talk about your fee model here. I know that 100% of the fees from like the staking burn and all that goes back to the holders. You guys already have a super low fee model, especially compared to the other perp dexes that are around. How are you guys going to distribute those? How are those fees being distributed back to users?
Yeah, so that is the revenue that's being distributed to the stakers. And on the fees, I'll say that they're actually quite a bit lower than what we target them to be. And the reason is right now the spreads from the market maker are quite high. So to kind of remain competitive on an overall cost basis to a trader, we've discounted the fees in this kind of beta stage. So you can expect that sometime next month we'll be increasing the fees 50% to 6 basis points, and that will coincide with a decrease in spreads from the market maker now that funding rates are live. And then once we onboard kind of like the next market maker who's already in process, they will, like, the fees will come down significantly, or the spreads, and we can increase our fee to 8 basis points, which just to clarify is like 8 basis points total. So it's 4 for open, 4 for close, which is even below what Binance current fee tiers are for the tier 0 traders. So that's the fees that we have accumulated to date are lower than what will be going forward. And then we do have a revenue share with SIM. So that is kind of metric based on our volume and based on our SIM holdings. So a portion of that will go to SIM, and then the entirety of the portion going to IntentX is distributed to the stakers, essentially.
Oh, wow. Okay. So how do you guys make revenue as a team then, besides the initial tokens, or is that it?
Well, this is kind of where I mentioned, like, the team has stake tokens, and there's also treasury tokens.
Oh, so you earn those fees.
Yeah, so we essentially participate in that revenue distribution, same as everyone else.
Yeah. Very cool. Yeah, I love that. Yeah, I think I've done interviews where people get really hung up on the percentage of a token that the team is taking, right, as opposed to how the team tokens are being utilized within the ecosystem. And I love that. Super cool. So you guys are building, you play it the same as everybody else. That's awesome.
Yeah, there's some people may not like that there's like team tokens or treasury tokens, but I think what's important to realize is that all of the revenue is kind of going to the token stakers, so it's really necessary. And to kind of explain how most other projects operate is they will give like 50% of revenues to the token stakers. So the team kind of gets 50% off the bat, and then the team also has like a token allocation. So they're kind of double dipping, right? They're getting like the 50% up front, plus they're getting a big portion of that remaining 50. And maybe because of that, maybe they have like a lower treasury allocation than we do. But we have 100% of token stakers, so it's kind of necessary. I just want to highlight that. But it is the more honest way of doing it, right? There's nothing hidden, like everything's open and public. So hopefully, people can realize that.
Yeah, 100%. Yeah. All right. Okay, so the next thing I want to talk about is the SimIO tech. I know they're being used with Athena and like a bunch of other stuff, and it's just kind of, what is it? about this tech that makes it so like great to use and build on?
Well, it's really all of the things that I explained earlier, like the actual like architecting of the system. It is really innovative and allows for like really offerings that don't exist anywhere in the space in a really like logical way to integrate, right? Like if you were to start up an AMM, you need to like acquire liquidity. You need to build liquidity, and it's a very expensive process for a DEX, like with like heavy token emissions, heavy percentage of revenue going to them. With the SIM model, you don't have an LP, so you completely like eliminate that aspect to it, and you essentially enable trade on a wide variety of assets, like with deep liquidity, low fees, right? At kind of a very low cost basis to start up, because if you kind of like integrate into the system and there's already market makers that are operating and offering this, then you can just kind of like tap into that liquidity source, if that makes sense. And I think this is going to be really interesting going into the next year on like distributions, and we're kind of, I see IntentX as, I say this, the spear tip that kind of like pushes SIM.io forward and pushes adoption forward, and, pushes what front end offerings are forward. So we're really looking to like penetrate into the perps market in a big way, compete with, larger, more established like incumbents. And that opens a lot of doors for like SIM to advance as well. And then there's a symbiotic relationship, with all the actors in the system. So like IntentX is the front end, SIM.io is the back end, and then there's a market maker. Those are kind of the three entities. And the more volume that we drive to like market makers, for example, the more offerings that they can give, because it's more profitable to them. And that in turn allows us to bring in more users, right? And then likewise with SIM, the more we can collaborate with them to like inform on future developments and then collaborate to like push them out, the more efficiently like they can ship. And like if we're innovating on the front end side, then they could focus exclusively on the back end side. So there's a really great like collaboration between the different entities in the system, and they all bring their own like perspectives and values forward. And I actually really like appreciate how the system is set up, because I think it allows for pretty much the greatest minds in all their respective fields to kind of collaborate on innovating one solution.
Yeah, it's fantastic. I've been following Lafa and all those guys since the Deus early days. And then obviously I've been familiar with some of the other stuff that you participated in. So I was super intrigued by what you guys were going to be able to build kind of, in parallel to each other. And you have pretty much a revolutionary kind of front end experience here. And then the back end is obviously next level as well. So it's really cool to see this all come together. Really excited for you guys and for them. So let's kind of talk a little bit. Let's kind of launch a little bit into your roadmap here. When can everyone expect the V1 mainnet launch, and when can everyone expect to participate in the token generation event?
Yeah, good question. So the mainnet, how we're approaching it is it's more milestone based than it is time based. Like it's not like on this date we will, launch. It's more right now we're in open beta, like it's still early. We recognize there's a lot of things that users want, and we're working on all of them, right? Like stop loss, take profit. You can already take profit, but we could just improve the UX on that. Like different custom charts, account abstraction solutions, gasless trading, like off-chain signatures, like, and then more importantly, like right now we have constraints on the open interest, and almost every day since launch we've hit an all-time high. But these are the kinds of things that really need to be ironed out on like a feature level and then a scaling level before we can consider ourselves like fully launched. So kind of the milestones that we have are funding rates, which are coming next month, multi-chain deployment, which is going to happen probably by sometime in February. We'll be on our next chain. Then the stop loss functionality needs to be there. And then open interest needs to be unconstrained. And once those things align, we'll really be ready to kind of push IntentX as like a complete product with full functionality, and really work hard to like bring new users in. So that's what I would consider mainnet, and what exact date that kind of like all coincides, I'm not entirely sure, but sometime in late Q1 is my guess, or early Q2. And then the TGE is kind of like similar. You know, right now we have a lot of interest and a lot of demand, which has been really great to see. But certainly we don't want to deploy our token in a scenario that, we have like open interest caps, because with our trade to earn incentives like going live, we do believe that'll spur, a lot of trade demand. So that's kind of what we're working on now. And that comes with the new market maker integration. So I guess what I could say right now on terms of timeline for TGE is it's going to be in Q1. Going to be in Q1 2024. So we'll be announcing some more details kind of in the coming months. We do have some really big plans for the TGE as well. And then the airdrop. So everybody trading on the open beta right now kind of qualifies for an IntentX airdrop upon TGE based on their trade volume. So this is how we're kind of rewarding the early contributors. And, it's actually a really important process for us, for users to use this and like give us feedback. And we've already, resolved so many issues. It's really great to see. And we want to give back to those users who are like contributing at this early level with this airdrop.
Yeah, absolutely. I recommend everybody else just give up. I have hundreds of dollars of trading volume. I'm obviously going to get the largest airdrop, so good luck. No, I'm just kidding. Awesome, very cool. I'm super excited for mainnet launch. Have you guys decided on the next chain? I'm not sure if you've made that public or anything. I'm not, you're not required to say. I'm just wondering.
Yeah, I mean, I can't guarantee anything, but I think Arbitrum, is where a lot of the trade volumes are. So we're definitely keen to kind of jump into that pond and start playing around.
Yeah, absolutely. Yeah, that would be a good one. What was kind of the initial, I didn't ask earlier, what was kind of the initial, why'd you guys want to go to Base first?
So Base is, I think, a really promising ecosystem. Like the nice thing about, being early to a chain is like, you can kind of grow alongside it. And this is something that other projects have had the benefit of, like GMX and Arbitrum, for example. We kind of look at our, at the end of the day, we're going to be everywhere, right? Like our front end will be deployed anywhere that there's trade demand, really. So in that sense, we're chain agnostic. But where do we kind of want to build like ecosystem alignment? And that's where, we want to pick a home that is, going to be here for the long term, that has high growth potential and has like strong user onboarding mechanisms. And so obviously like Base is backed by Coinbase, who's really a titan of the industry, even more so now that Binance has been dethroned and publicly shamed by the by the regulators in the US. But I have full confidence that the Base L2 is going to be a chain that stays here for the long term. Coinbase is going to support it. They're also going to be on-ramping their user base into like the Base ecosystem. And how many, let's say like the market is turning around now and people are kind of getting back into crypto, right? Prices go up. People who maybe have used crypto in the past, who already have a Coinbase account set up, are going to go to Coinbase, right? And if they want to kind of place some meme coins, kind of get into the on-chain ecosystems, they're going to go to Base, which is where they're going to be off-ramp. So that's an important consideration for us. Yeah, and it's kind of, we want to grow 100x at the same time that our home ecosystem grows 100x. And that's what we're looking to align, really.
Yeah, fantastic. Makes a lot of sense. Makes a lot of sense. All right. Well, I know we're kind of running up towards the end of our time here. I'm not sure if you have any time, if anybody has any community questions. If not, I'll give you the opportunity to just kind of, give your final words, for your parting words for the audience.
Sure. Well, I have some time, so if there's any questions, I'm happy to address them.
Yeah, guys, if you got any questions, just raise your hand. If we don't get any questions, Levi is actually going to give out his seed phrase live at the end of the show, so stand by for that. No, I'm just kidding.
You might be disappointed with what you find.
Yeah, that's same with me. I'll happily send you my wallet so that you guys will not ever consider asking for it. All right, if you got any questions, raise your hand. If not, then just kind of let you give your pitch. I don't see anybody out there yet, so. All right, looks like no takers.
Cool. Awesome. Well, yeah, thanks everyone for listening. I'd love to jump on a follow-up spaces with you, maybe as we kind of like approach or past TGE. I think that'd be really great. And for everyone listening, check out our open beta platform. Make sure you join our Discord, you give us feedback. It's really important in the process, so really appreciate everyone participating in that.
Yeah, absolutely. Thanks so much for coming on. Definitely would love to get another one set up with you. I've learned a ton here as I'm, kind of starting into my actual type trading experience. This is a great platform to learn and kind of develop on as well, just with the experience that I've had on it so far. So super thankful for your time, man, and I really look forward to the next time we get to talk, and I hope you have a great day.
Yeah, thank you. Thanks, everyone.
All right, everybody. Thanks so much for tuning in. Really appreciate your time and support. Couldn't do this without you. If you're hearing this now on YouTube for the first time, please hit that like and subscribe button. Once again, my name is Relentless from DeFi Raiders, and I'll see you next time.